Welcome back. Now, Adcock Ingram has posted marginal growth during the annual period, with headline earnings per share increasing 1.6%. This was due to a stronger second half performance, where there was better demand for its over-the-counter and consumer health products. Joining me now is company CEO Andy Hall. Andy, thanks so much for your time this afternoon. Now, it's a tale of two halves, with the second half coming in stronger and giving the group a bit of a boost. Talk to me about those driving factors. I did touch on them.
Yeah, good evening, Tarling. Good evening to your viewers. It is a tale of two halves, and I guess we could say thank goodness for that, because we did report some pretty mediocre results at the end of December. But our business units managed to turn everything around in the second half. Our consumer business did really well with the direct distributorship model into the informal sector, where we had battled in the first half. And particularly what we've seen in that business is that our personal care and home care products have done really well, all showing double-digit growth. So that was nice to see a well-executed strategy playing out well in the market. And then I guess you remember sort of April, May, we had a nice, for pharmaceutical companies, that is a nice early winter in South Africa.
Not nice for us, but for you.
Correct. And being the biggest player in cough, colds and flu, our over-the-counter business clearly benefits from those sorts of heavy flu seasons. So what we saw in both consumer and OTC was a real big turnaround, half two on half one. We also saw some really improved factory performance in our OTC business, and that helped effectively boost their margin for the second half as well. So if we look at trading profit overall, we were up sort of 30% half on half, which was nice to tell our shareholders after the disappointment we showed in half one.
Talk to me about whether the macroeconomic environment has been supportive. I mean, just looking at the different segments and the demand dynamics playing out there, I see hospital and prescription segments posted declines in trading profit, while the other segments that we touched on performed well.
Yeah, certainly as a company, we are exposed to the macroeconomic conditions in South Africa. What we really do benefit from, though, is that we trade across the entire LSM spectrum with products that are price pointed right from the bottom really up to premium price products. So even in times when unemployment is a problem in South Africa, or the amount of spend in consumer pockets is low, we do still tend to do okay in our consumer and OTC businesses, particularly because, one, the price point, and secondly, we tend to introduce our products in various pack sizes. So if someone can't, for instance, afford to buy a bottle of citrus soda, which is a premium price product, they can buy a couple of sachets. And the same would happen with products like BioPlus and Panado. So that does tend to help us with those innovative strategies. The other thing that's assisted us on the macroeconomic front is the rand has done relatively well this year. And we do have a lot of dollar and euro input cost of goods. So with the rand doing a little bit better than it did last year, that assisted us with a bit of a tailwind as well.
And let's talk about gross margins then, and the dynamics playing out there. We can even touch on managing expenses. I know Adcock is big on marketing its products to give it more of a competitive edge. How are you balancing those costs as well?
Yeah, it's interesting. It's always something that one needs to look at. You know, in the good times, people tend to put more behind marketing of products, and in the bad times, that's the first budget that tends to go. But we're very careful in terms of allocating marketing spend to our big brands. So in particular, in the consumer business, where we do advertise directly to the consumer, we tend to make sure that our marketing investment is still high. Where we have managed to cut costs is on what we call discretionary spend at Adcock Ingram. So we're very careful about approving things like overseas travel, making sure that conferences are not in places that are too lavish, etc. So certainly our management team has done well in holding back expenses this year, but not at the expense of the brands, because that's something that we simply could not afford to do.
Now, results aside, Andy, just a month ago, the group announced that Indian pharma player Natco will be acquiring just above a 30% stake in the group. This move will, of course, result in the firm delisting. Just walk me through the rationale behind that move and the synergies between both companies.
Yeah, sure, Tarling. This was an unsolicited bid, so a global multinational generic player that I think had effectively recognized the value that was inherent in Adcock Ingram that wasn't being reflected in the share price. And we do have a controlling shareholder already, being Bidvest, that holds just short of 60% of the business. And Natco Pharma has come in for the other 40%. It's a real benefit for our minority shareholders who are now getting about a 50% premium to the price at which the share was trading. So we are hopeful that most of our shareholders certainly would be in favor of the deal. It's a good time for them to realize value. And then importantly for our company, we are not a particularly big generics player in South Africa. We're very, very big in over-the-counter products and consumer products and hospital products. But what Natco can bring our business is a very strong portfolio of generic medicine. Natco is vertically integrated, so that should help us on the cost side. So we should be able to become more competitive in South Africa. And then on our supply chain side, they have 7 facilities of their own in India, have a large supply base, which we should be able to help leverage into Adcock Ingram. So all in all, it's probably a good deal for shareholders and certainly a good deal for the company at the same time.
All right, let's leave it there then, Andy. Thanks so much for your time and just taking us through the year that was for Adcock Ingram. Now, that was Group CEO of Adcock, Andy Hall.